Good morning, guys. This is Mr. Oxy coming at you from Palm Beach in Florida. It is Sunday. It's a beautiful morning in Florida. It is October the 3rd. I have tried to make this video on a couple of occasions, and I'd like to say it's a software glitch, but maybe Mr. Oxy is the glitch. But anyway, here goes. What I wanted to do is share with you a September to remember. It has been a busy month. There's lots of stuff going on. Some of it is favorable, some of it is not favorable. But how did this all begin? Well, at least with a bit of a smile. On our community channel, Robert Burke, who's a regular contributor, took the time and trouble to comment on a video that I posted actually now, probably about 10 days ago, called Mayday. And Robert used the words of a popular Beatles song from about 1968 or so, and said Bester has his barrow in the marketplace. Mayday is the singer in the band. And then Mr. Burke and I started chatting a little bit offline, and we kind of had this little sort of challenge going. And I shared with him my charitable foundations work, where I work with some children from a lower income community, and they are middle school students. And I said, I'm going to record Obladi Oblada with that group of students, and we see how it goes. So if you stick with me to the end of this video, I will actually play you that 1-minute rendition of Mr. Oxy, accompanied by some middle school students doing a live version of Obladi Oblada. Anyway, let's get into the meat on the bone here. So for September, the month of September, this is a slight overlap because it wasn't quite 11%, but you can see energy was a significant outperformer, very, very much in green, or in this case, light blue, while the rest of the market pretty much tumbled for the month. For those of you who've been following my channel for a while, you will know that I'm long primarily in energy and financials. So the market, even despite the drawdowns, pullbacks, sell-offs, whatever you want to call it, for September, didn't impact me too negatively, and I hope that none of you experienced unnecessary hurt while the market was pulling back. More specifically, for the month of September, Nasdaq reported that energy was up 9.4%. You can see everything else was negative. Year to date, it's 43%. And then you can see how it's been performing Q over Q, so quarter over quarter. And compared to its 52-week high, energy is only 6% off the mark, but up from its low nearly 100%, which obviously can be translated as a two-bagger. Nasdaq said 10 of the 11 sectors, well, that's pretty much all of them except for energy, including 5 sectors, declined more of 5%. Energy was the lone sector in the green, registering a total return of 9.4% and 43.1% year to date. That's pretty good, guys, for long investors, and most of you who follow this channel are long energy investors. That's good stuff. You know, sometimes there are benefits to being long and strong, and this is an example of it. If you pick the right commodity, you do your own due diligence, and you make sure that you have a sound investment hypotheses or narrative that you are using in order to make your investment decisions. Just 1 month ago, all 21 members of the S&P 500 Energy Index were trading below their respective 50-day moving averages, and last week that figure rebounded to 100% of the energy stocks above. Financials declined a relatively modest 1.8%. Some of my financials took a larger hit, like AllianceBernstein was an example of that. Others didn't do too badly. In fact, a couple of them even nudged up just a little to be positive. A couple of questions from the community forum, from our chat site. SS said, hey, Rudy, what's your thoughts on Kathy's view? This is Kathy from ARK. Or could we just say speculative narrative? Sam asked a similar question. He said, I'm feeling kind of contradictory because I hold a lot of ARK Invest ETFs. At the same time, I hold Oxy and XOM in a large proportion of my portfolio as well. So I'm just going to pause here for a second because I responded to Sam and said, not really, you can view one of them as a hedge for the other. So in my own long portfolio, I also have a couple of positions that are relatively equal in terms of my investment. One of them is AllianceBernstein that I mentioned a second ago, which is a financial services corporation. And the other one is ICANN, which is IEP. AllianceBernstein is AB, and IEP is ICANN. And these two positions in relative terms are also contradictory one to the other. By way of a specific example, AllianceBernstein has a large long position in a commodity called CMBX6, which is commercial-backed mortgage paper, and the 6 just indicates into what category it fits. So AllianceBernstein is long and strong CMBX6. ICANN, on the other hand, has a large short position in CMBX6. So one of them is going to be right and the other one is going to be wrong. Now, I hold both. So you could almost say one of them is a hedge for the other. You don't need to look up CMBX6. It's not that exciting. It's just commercial-backed paper, predominantly strip plazas, shopping malls, commercial rental space, office space, etc. Anyway, one of them is invested long and the other one is short. One of them is going to be a winner and the other one not. Of course, much like ARK, SAM, ICANN, and AllianceBernstein also have a variety of other investments in their portfolio. So it's not necessarily material in terms of the total performance or return on investment by the actual issuer. The oil price has been kind to us for September. Currently, we're sitting with WTI at around $75 and Brent is about $80. But look at natural gas; it's just exploded now, $5.61. The prices are just off the charts. And the problem with that is that this leads to the hyperinflation that I had mentioned in previous videos before. When energy goes up, everything is going to cost you more. How about this headline? A German power plant just ran out of coal in a latest energy shock. Well, actually, for me, it's not the latest energy shock. I'm going like, a German power plant was burning coal? Well, actually, Germany is obligated or forced to burn a lot of coal in order to generate energy because they are running low and they cannot supply or meet the current demand. Even Putin is playing some games with them in terms of natural gas from Russia, helping to push up the price. And already the German people are paying probably the highest prices in the European Union for heating and cooling and for commercial purposes. And of course, this is all hyperinflationary and not good news. Now, I know we have some really smart German followers on the channel. So if any of you can educate me, update me, or even correct me if I'm giving out wrong information, I'd appreciate that. And you guys can let me know what's happening in Germany. All I know is that it is not good news. Headlines like this is not good news. Now, coming back to Cathie Wood from ARK, why were people on the channel even asking questions about Cathie? She basically announced that crude oil prices will go the way of whale oil as demand has peaked. Now, I understand that oil and oil kind of match up here, but really, Cathie, whale oil, is that your comparison? Couldn't you have said crude oil prices will go the way of BlackBerry or Blockbuster or something like that? I don't know. This is not a great comparison. This is like just tapping into something that happens to be oil and oil, says Cathie Wood. What's her actual tweet? She said, according to the EIA, global oil demand peaked at 101 million barrels per day in 2019, dropped to 92 million during the coronavirus crisis, and rebounded to 97 million barrels per day in 2021. Based on our forecast, your forecast is not good, for EV sales, ARK Invest believes that oil demand has peaked. This guy, not me, QE Bubble, replied and said, this is on Twitter, by the way, what a terrible call. Oil is at nearly $70 and likely to be heading above 100. Supply shortage and demand is soaring. This call rivals only Joseph Schachter for missing out on one of the best trades in North America. This is not the first time that Cathie has commented about oil. In fact, previously she said oil is going back down to $12. She may be right, but when? In 2040, 2050? I'm not sure. And then the other thing is throwing in, based on our forecast for EV sales, really? That's your narrative? Let's take a quick look at this. According to the same EIA, the total share of US energy consumption for 2020 included 22% residential, 18% commercial, and 33% industrial. If we add these up, 22 and 18 is 40 plus 33, 73%, which means by far an overwhelming majority of consumers using energy and consuming energy are not using it for transportation. However, transportation is a large chunk of the pie or a large slice of the pie at 26%. And the EV market currently is what, 3% or something of that. So in terms of total energy consumption, The electric vehicle share is, approximately 2.5%, 3% or so. And don't forget, by the way, that it takes significantly more fossil fuels to manufacture an electric vehicle than what the vehicle will probably save during the lifetime of use by the owner who actually ends up acquiring it. So all these sectors together, plus the electric vehicle manufacturing sector as a whole, are burning fossil fuels as if it's going out of fashion. So to me, that narrative doesn't make any sense. But once again, you guys can educate me. Let me know in the comments what you think. I have to, of course, include information about your favorite stock and mine, Occidental. The issuer, so in this case, Oxy, opened September at around $25 and closed September at about $31. Now, you could say, Mr. Oxy, this $31.15 was the last trade on Friday, which was October the 1st. So I'm stealing one day and adding it to September. So I'm not really being absolutely truthful, but I'd like to be. So let's just call it about $25 to about $31. And you can see the longs on Oxy had a fairly decent September, despite the market tanking with all the sell-offs and whatever else you want to call it in terms of the September trades. 9 analysts are currently saying Oxy's target price is about $35. That's a 12% upside from where we are right now. I think we blow by $35 quickly when we get to the next quarter when they report, which feels like it's about 3 years away. Talking about 3 years away, Oxy is about to report on November the 8th, 2021. And based on 9 analyst forecasts, the consensus EPS for the quarter is 54 cents. The reported EPS for the same quarter last year was negative 84 cents. Well, last year was an extraordinary year, and that particular quarter was still heavily impacted by not only the coronavirus, but also the wall of debt. I remember all that. It kind of seems to have subsided and sort of gone away. Zacks is estimating sales for the quarter of around 6.4 billion. I'm going to be more bold than that. I think this is slightly conservative. I think they get closer to 7 billion rather than 6.4, but that's just Mr. Oxy sharing spidey senses or gut feel. So don't take that to the bank. The consensus estimate per share 54 cents. I think we can even beat that. I think even this is conservative. The other thing to keep in mind is that last quarter, Occidental had a record-breaking free cash flow quarter. I think it was the best quarter in 10 years, if I remember correctly. Q3 is going to beat the free cash flow for Q2. Plus, there's been a significant chunk of debt reduced. So it'll be really interesting to see where Oxy ends up at the end of the next quarter. Just a couple of more headlines. CNBC said key inflation watched by the Fed hits another 30-year high. Guys, this is not good news, but if you're an energy investor and you long in energy, it's arguably, good news. So you can almost say my energy investments are a hedge against inflation. It doesn't matter what number the Fed publishes, and they use numbers that are usually in the single digits, 3%, 4%, 5%. People who are living paycheck to paycheck and struggling even to buy basic everyday commodities like milk and bread will scoff at those single-digit inflationary numbers because the real numbers are much higher than that. For us as investors, we can use our investments in energy as a hedge to hyperinflation, because hyperinflation affects and impacts every single living person on the planet. A quick summary here from Nasdaq, executive summary for the month of September. Seasonal headwinds arrived on cue in September. It's kind of funny for me. We used to say when I was still working in the financial services industry, selling may or go away or stay away. Anyway, seasonal headwinds arrived on cue in September. So it should be selling September. I'm not sure what rhymes with September. Political and regulatory risks have risen sharply in the United States and Canada. Why the United States and China? What about Canada? What about Australia? What about the European Union? This is not unique or specific to the US and China. This is a global phenomenon. There's a lot of stuff going on, which is not necessarily good right now, but I'm not going to go there because it's not meant to be a downer. A global energy crunch is roiling commodity markets. The supply is what it is. The demand is off the charts. One more headline here from Nasdaq. September 2021 was the S&P's worst performing month since the height of the pandemic. in March 2020. So guys, that's sort of a wrap on this video, except for the final minute, which is coming up in just a second. In the meantime, I look forward to your comments on the news that I've shared, and you can let me know what you think about some of these things. And of course, if you like the content that I create for you, please subscribe so that it will keep me motivated to do more. So just by way of a little introduction, many of you will know by now that my family and I run a charitable foundation. So 3 of my family members, which includes my wife and my 1 son, work for our charitable foundation daily. And we actually personally run a couple of programs with some of these recipients or beneficiaries of our charitable programs. And I do a program which is called Junior Creative, which teaches young people financial and personal self-sufficiency and sustainability, and teaches them to create or make stuff, which includes YouTube videos, because you can monetize that. My wife runs a STEM program which teaches students about things like apps and coding and things like that. And my younger son runs a program that teaches young people to write and create songs and music, and he takes his mobile studio with him and turns some of the things they create into a very professional production. Now, I did not have the mobile studio with me, neither did I do a professional production. This is Mr. Oxy with a group of middle school students from a lower income school near where I live, doing our live rendition of Obladi Oblada, raw, unedited, no auto tuning. It is what it is. You take whatever it is and you enjoy it. And I hope you enjoy it with me. Thanks for watching. Thanks for listening. I'll see you guys soon. Bye-bye.
Buys a 20-carat golden ring, takes it back to Molly waiting at the door, and as he gets to her, she begins to sing. Oh la dee, oh la da.